Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for Mortgage News Network, and it's brought to you by our friends at PRMG, working for your best interest. Surprise, surprise, surprise. Holy cow. Two shockers last week in the jobs arena. First of all, ADP coming up with a number where numbers beat estimates by, get this, 6 million jobs. They thought that we'd see about 8.7 million job losses, but 2.7 million jobs were lost according to ADP. Not to be outdone, the BLS number comes in on Friday and says, well, we're estimating that there's going to be 7.7 million jobs lost. Instead, 2.5 million jobs gained. Wow, that was a big surprise. Caused mortgage bonds to struggle, get off to a tough start on Friday. Treasuries going up towards 1% above 90 basis points, quite the big jump. Heck, if you were an MBS Highway subscriber, no worries, we had you covered. Rode it all the way on the way up and locked just before pricing started to get worse. If you're struggling with this type of stuff, get on MBS Highway. We will protect you. Now, when you take a look at the overall numbers, what does this mean for the economy? Well, we still have a 13.3% rate of unemployment, according to the BLS numbers, and maybe most of this is coming down. Additionally, when you take a look at the U6 numbers, which takes into account people that wish they could work full-time, but they have to take part-time work, and discouraged workers, things like that, it's still over 20%. So hasn't come down as much. I think that we're going to see this initial move lower, but then it's going to kind of start to slow down in the gains that we're receiving. Also, when you see what happens after the PPP money runs out, that's not going to happen until about August, but people are still getting PPP. They're counted as employed. Remember, it's about 5 million people that would have resulted in a difference of a little over 3% on the unemployment rate. So we'll see what happens with that, but hopefully people will still keep coming back to work. So why are mortgage bonds behaving badly? Why are interest rates, on a relative basis, we're still under 1% on the 10-year Treasury, moving higher? It's because of inflation expectations. So will we start to see some inflationary pressure because of all of the stimulus that's in the market? Now, last week we did a really good call with Katie Stockton, who's one of the best technical analysts. She thinks that maybe we move towards 1%, but she thinks that's a normal ceiling to get a pullback. She also feels the stock market, and we've been saying this, been a head scratcher, but we're almost at the highs that we were in February. If you take a look at the S&P 500, we're looking at that 3393 all-time high. We're not that far off those levels, but that also might be a natural resistance and pullback level because, listen, after all, if the economy comes back even 90%, that still would mean that things would be very, very different than where we are. And you can just look around and see what's going on. Activity in some areas is improving and good, and while improvement is always welcome, it's not back to really where it was in most cases. So does the market account for that? Does the market account for the fact that it will be a little bit slower to recover? Now, meanwhile, we're seeing things like forbearances slow to a trickle. That's a good thing, but there is a troubling stat in there because when you take a look at forbearances, you look in April, there's about 44% of people, 45% of people that were actually in forbearance but making payments on their mortgage. That has slowed now to just over 20% of people that are making those payments, about 23% of people making those payments. So that puts a big burden on servicers. It is possible now with all of this good employment data that the entrance to forbearance might be stopped in the very near future. So we'll be watching for that as well. Overall, you have to be very nimble here because the markets are jittery. We're seeing a lot more price volatility. Even though the Fed's in there and buying, we're still seeing quite a bit of price activity and volatility. It was calm for a while. We kind of got spoiled there, but that activity is starting to move once again. So make sure you're protected. Get on board MBS Highway, and we will see you next week. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.